Welcome, I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Vince Stefano, where we're here to provide you insights about the markets, investing, and taxes. So here we are. Today is January 23rd of 2025, and over the last week, the stock and bond market has changed a little bit. So we've seen an uptick in the Dow Jones, the NASDAQ, and the S&P 500. The Dow Jones, as of yesterday's close, which was January 22nd, was at 3.79%, and today we'll see where we end up, but the market's up today. And the S&P 500, as of yesterday's close, was at 3.48. It looks like it's up a little bit today. So we've seen a couple percent move over the last week, especially in the stock market. I know there's still earnings being reported. As of the end of last week, only 9% of companies reported earnings, which were 79% of those beat estimates. So looks like there's still a lot of earnings coming through our way. And for the kind of the short-term kind of fixed income, we look at that occasionally. The one-year CD rates in treasuries right now are at about 4.25%. So that's still kind of treading a little over 4%. It's not the 5.5% we saw last year.
Catherine, I have one word for you.
Yes.
Stargate. Stargate, baby. That caused the market, especially the tech stocks, to move up in the last couple of days, and it moved up a lot. For those people that don't know, Vince is going to tell you what Stargate's all about.
Oh, thank you so much. I'll start with Stargate, and then I have some other comments on it. But Stargate is a $500 billion investment by Larry Ellison, Sam Altman, and Masayoshi Son of SoftBank, and they are committing $500 billion to developing data center and AI technology. And, we've talked a lot about that over the past, and, AI is going to continue. And the big question, though, with AI, and I keep saying this, and it's not a negative at all, but they have to find power. And they're looking at the electrical grid, and they're not sure that can sustain or give the power to the data centers that they need. So they're now looking at areas of nuclear and natural gas. And so you're probably going to see these data centers built in areas where there's a lot of natural gas, i.e. Texas, West Virginia, maybe the Dakotas.
But I'm seeing a lot about nuclear power, too.
Oh, nuclear.
And there are companies that have mini nuclear reactors, so you could build it anywhere.
That's true. And, a lot of them are developing smaller nuclear technology where they may be able to develop a nuclear component that's the size of a suitcase, and it can run a data center or run technology. There are a number of those companies we're invested in right now. That would be
a pretty big suitcase. I haven't heard that small.
No, they're looking to do small.
But I've heard it's more like the size of a garage or something.
I mean, what I'm saying is the technology
suitcase
it's always the kind of like the old Intel effect where, as technology gets better and better, it gets smaller and the components get smaller and smaller. So with that, the big question is, where's the market going from here? In my last week, I'd mentioned that the market was concerned about inflation, interest rates, growth scare. I'll tell you the truth, I think I was dead wrong on that, because the market right now is really enthused about this Trump administration and the executive orders he's signing. We're seeing over $750 billion of new investments committed, not only Stargate, but in addition to that, another couple $100 billion. And then today I heard Saudi Arabia is committing $600 billion to the United States over the next 4 years. So the market is very enthused about this, and this is a very, very bullish sign for the market.
Well, Vince, I have to tell you, I think that Trump right now is like a light, and all these moths are going around him, because look at Zuckerberg, who couldn't stand him. Who are some of the other?
They had the Google exec. They had Tim Cook there.
They're all around now.
They're all around.
They're all on
his
they want to get on his good side.
But what I want to say is, you talked about technology did really well yesterday, and Catherine was talking about the S&P earnings. What we're seeing now is the breadth of the market is looking very, very solid. It's not only the top 10 or 15 technology stocks that are doing well. The financials and industrials are also doing well, and it's providing a very, very good overall support for the market. So my thought and my suggestion to all those listening today is get yourself significantly invested in equities, especially those equities that have a high barrier to entry. And what I mean by that is those companies that have a product or a service that's very difficult to replicate. Those are the companies you want to own for the next couple to 3 years. A lot of that's in technology, a lot of that may be in energy, a lot of that may be in nuclear. But I still think that the processors, the software companies, and those types of energy companies that can fuel Stargate are going to be the big winners over the next 4 to 5 years.
So I have to be the one that always tempers you, and that, yes, we should have a lot in equity, but it just depends on someone's personal situation. So I don't want people to go out there and put all their money in stocks, and then it goes down, and then they're going to say, Vince, that's what you told me.
Well, I said significant. I didn't say 100%. And if your advisor, is keeping you away from stocks, give me a call, 760-692-5197. I will have a happy conversation with you about why you should be in equities right now.
Right. Well, the lawyers will have a conversation with you when they lose money and they sue you. Oh. So, and that's the unfortunate part of our business, to be honest with you.
Oh, that's true. But again, I'm not talking about, investing in, very highly speculative companies that it's like Vegas. I'm talking about very solid companies. And one more thing. I did see this, and I don't know where I saw it, but I saw small business optimism since Trump took office is up 41%.
Huge.
That's incredible. Yeah. You don't see that often. Anyway.
Well, they've taken the shackles off. I mean, that's really, talk about crypto. It's the same thing. Yeah. They've got a pro-crypto administration, or at least he says he does. And the people who are there are not putting roadblocks in people's way to create crypto businesses. As a matter of fact, they're talking now about having a crypto reserve, that the government's going to buy that. I would think that would cause the prices to go up on something like Bitcoin and whatever these other coins are. I mean, what would you think about that, Vince?
I'm not a big crypto fan. I have very little invested in crypto, unfortunately. But I think that anytime you can get an alternate currency that people can rely on and feel comfortable with, I think that's going to only improve the overall economy.
I think when there's more regulations and people feel more comfortable with it, and that's what we're starting to see. Like you said, when they're starting
up to a point. Yeah, they want to regulate it so that people understand what the parameters are. Yeah. But then they, hopefully they don't go overboard.
Well, they want to tax it too. So
they want to tax everything.
There'll actually be 2 check boxes on your 1040 this year dealing with crypto on the very first page.
Last year, good news over here.
But I actually think that small businesses, the optimism that you're talking about, a lot of small business owners rely on that qualified business income deduction, which was part of the Tax Cuts and Jobs Act of 2017. And I believe that they think with the Trump administration, they're going to make that permanent, which it's a fantastic, it's 20%, it's a 20% deduction of whatever your net profit is. So that reduces your taxable income. And I think that's definitely good news.
This is going to be interesting because, Trump also talked about not taxing Social Security, which we've talked about in the past.
Or overtime pay.
I'm sorry?
Or overtime pay.
Or overtime pay, but tips and that type of thing. And of course the other side of it is saying, well, where are you going to get all the money to pay for whatever the programs are? And, one of the things we need to realize that the economy is not static. It's not where if you have money on the right side and you take it from the right, it just goes to the left. What happens is it goes up as the economy grows. So you have more and more and more money. That's what he's thinking. Whether that works or not, I mean, some people don't like it. Some people do. We'll see. But, it's not like I'm going to take money away from something. So part of it, I think, if he's right, will come from the growth of the economy.
Reagan expanded the tax base, and look what happened. Everything did quite well. So, if Trump can expand...
But I still hear a lot of people talking about supply-side economics and how it doesn't work.
But I'm
not sure I agree with that, but that's...
But if businesses can grow very nicely over the next 3 to 5 years during the Trump administration. You're going to expand the tax base very nicely and pay for a lot of the debt service that you need.
Well, if they can do two things, one is grow the economy so you have a larger tax base, and two is cut some programs.
Oh, yeah.
You know, I mean, you need to do both.
Yeah, no, that's true. I agree with you.
And that's supposedly what this Doge thing is all about.
I agree with you there 100%.
So recently I read an article from the Journal of Financial Planning, and one of the topics that was discussed was Social Security, and including Social Security as an asset class. And so as we do financial planning and kind of looking at where the income source is and how are you invested, Social Security is a part of the income that you get when you retire. And so I think it is important to kind of evaluate what's the income, what's the future income. I know we do some projections and add the cost of living adjustment in our projections for Social Security. But Social Security does act more like a bond than a stock, obviously, because it has that kind of fixed amount of money that you get. And so I think as we look at financial planning and figuring out what's a good allocation for investing, you definitely need to factor in the Social Security, if there's any other pensions or rental income coming in as well, to make sure that, you know, how much do you need to live on and will your money last. So that's, we've looked at that. It's just kind of interesting that there are, you know, obviously some articles about this now too.
Yeah, well, I would look at Social Security just like a bond.
Yeah.
You know, you're going to get income, however much that is, based on your earnings in the past. And that is part of what your financial plan is all about.
You said that the COLAs were going to increase this year?
Cost of living.
Yes, so each year it gets looked at. In October they allocate the cost
What's
of living.
This year?
I think it was like 2
point something percent. And they're talking about next year right now about the same.
Okay.
A couple years
That's
ago.
Still pretty good though. I mean, yeah.
Well, a couple years ago, you know, when inflation was at 9 and 10%, I think the cost of living increase was what, about 9%, 8%, something in that range. So I mean, that's the only positive thing. But you know, where's the money come from? That's the negative thing.
They increase the Social Security wage base every year. I mean, it keeps going up. I mean, Medicare is unlimited, but Social Security does have a cutoff.
Yeah, so for 2025, the COLA for Social Security was 2.5%. And then the projections for the COLA, the cost of living adjustment for 2026 is at 2.1, but that could change between now and when they release that in October. But as of now, for this year in 2025, the cost of living adjustment was 2.5%.
You know, that sounds good. The only thing is that
everything costs more.
No, they take more money out of Medicare, and so your real increase. It's not that you're not paying for something; you're getting something. But I looked at my increase in my. I know that it's hard to believe that I'm on Social Security, but I looked at my increase. The net was about $8. Wow. You know, I mean, you're not getting much because most of it went to pay for Medicare, which of course I still think is going to go broke, but we'll see.
We shall see. Well, tax season opens on Monday. In other news. So I think it's time
we're going to have a big party, right?
I'm having a big party tonight at my office.
We
are having our tax season kickoff event tonight. So it's an exciting time of year. All right, I'll keep it to a dull roar over here. So it's the time of year where you can set up an online account, and these online accounts, I think, are really fascinating. They were not available in the past, so you actually can create an online account with the IRS.
So what does that mean?
That means that you have a portal that is secure where you can apply for an identity protection PIN. You can view and pay any. You can pay balances or view your payments. I have a lot of clients that come to me often and say, I asked them, you know, how much did you make for your estimated payments? And they said, well, I paid what you told me. Well, I may have sent them several vouchers throughout the year and want to make sure that they actually made those payments. They said, well, can't you just look it up? So now you can. You can actually log on to your individual site, your portal, and see the payments that you've made. You also can get account transcripts. You can sign power of attorney forms if you want to designate your tax advisor as your representative. So those accounts are really are great. And one of the things the IRS is saying is to look out for tax scams. It's becoming more and more prevalent. So you can actually, like I said, in that online account for individuals, you can apply for that IP PIN.
Can you actually fill out your income tax forms on that?
There are other sites for that. I do not think that you can actually prepare your return in that portal. Correct. Yes. Yes.
And so the W-2s are coming out, the 1098 interest payment. I think I got my interest payment.
So that's one of the things that I'd suggest is as those tax documents do come in, organize them. Don't wait till the last minute to gather all your tax docs or misplace it. Maybe have one place that you designate or scan it in as it comes over. A lot of accountants have secure portals that you can upload those documents as they come in. One of the things I tell clients is to consider the tax implications of life changes. So if you had a baby, got married, moved, refinanced your house, got divorced, make sure that you let your tax advisor know that because there are tax implications for those things. And it's also really good to use a checklist as you're gathering your tax documents. So if you don't have a tax organizer or checklist, make sure you ask your accountant for one.
And I think we mentioned it last week, but just to remind the clients that work with us that use Charles Schwab, that the 1099s and year-end summaries usually come out the middle of February. So,
and the reason for that?
Is because there are usually corrections that happen. And so in the past, when they used to release them early on, then there'd be corrected 1099s, and it got really confusing for people. So I think if we can wait a little longer, and it's not really just Schwab having to correct. I mean, they're getting the information from either the mutual funds or the stock. They're getting the information after the fact.
And a lot of people like to do their taxes right away.
I know.
And I think the only people that should be doing that are the ones that are getting refunds.
Yeah.
Because if you owe, don't be in such a hurry to pay the government.
Agree. And there are, finally, there's just a couple of ways to reduce your taxes for 2024 in the current year. So if you qualify, you can put money into an individual retirement arrangement, an IRA, or you potentially can put money into an HSA up until April 15th.
HSA?
Health savings account. Thank you. Yeah. So it's a tax advantage way to save money on your taxes and pay for medical expenses.
Can anybody do that?
No. In order to qualify, you have to have a high deductible medical plan. And so this is a way for you. It's a triple tax advantage way to save money. So you put the money, if you have a high deductible medical plan, you can have a health savings account, put the money in, you get the tax deduction, and then the money grows tax deferred. But if you take it out and use it for medical expenses,
you probably don't
free.
know the answer to this, but I'll ask anyway. Do you know what percentage of people can do that?
I would say probably 30% of my clients do it.
So 30%, and let's say your client's a representative.
There are a lot of small business owners that do it.
Yeah.
Yeah.
That's still not a lot. So even if it's a little bit more, I mean, that's still, the majority of people can't use that. I think you got to wonder, why not just
why not make it available for everyone?
Exactly.
I agree with you. I think that's a really good point. That would be great for everybody.
It's government.
I think it'd be great for everybody to have a medical savings account.
Right.
A lot of employees use a flexible spending account, so it's something similar, an FSA. They also call it a cafeteria plan. So if you are,
what's that used for?
Medical expenses.
So the flexible savings.
Mm-hmm. So you can designate a certain percentage of your salary to be set aside to pay for medical expenses. It's it's done through your employer and through payroll, and then that money, as long as you use it to pay for qualified medical expenses, that money grows tax deferred, comes out tax free.
But does the employer have to have that plan in place for you to do it?
Correct. Yes, it has to be part of their benefits package.
Okay, most small businesses probably don't have that.
Which is why the small businesses do health savings accounts. So there's the two different plans, but with a flexible spending arrangement, you have to have done it by the end of 2024. My point is this is a way for people who do have those health savings accounts and high deductible plans to still save money on their taxes for 24, even though we're already in 2025.
All right. In the words of Jen Psaki, I'd like to circle back just for a moment to the Bitcoin and things like that. What I'm hearing is that they're using Bitcoin kind of like gold. They say that it's a store of value, and in some respects, you might be able to understand why, because it's not a fiat currency. So supposedly it will hold its value. Now, I think that's kind of interesting. 5 years ago, most people would say, no, that's not true. Right now, I think there are more people who are coming to the conclusion that maybe it is true. I don't know. What do you guys think? I know you don't do much in crypto.
It's not that I'm not a fan. I just don't follow crypto that closely. I follow it in the sense that as it goes up significantly, it brings the stock market with that, especially growth stocks, because it's a favorite of hedge funds. And hedge funds love to invest in crypto, and at the same time, they build their growth stock portfolios, and so it kind of goes hand in hand.
And say it's interesting. We had a client we met with earlier this week that has some money tied into the Bitcoin, and he was talking about using some of that money to pay for
Home improvements.
Home improvements. And so it's interesting. I was like, oh, here it's not, it's not just big companies, but there are also some smaller businesses that it looks like are getting paid out in Bitcoin.
Yeah. Well, right now it's still, excuse me, it's still a wild performance. It's going to go up and down. It's pretty volatile. So just be careful if you're going to do something like that. Make sure you know what you're doing. Talk to your advisor, whatever, and it's within your risk tolerance, because I can tell you that a Bitcoin. I remember we went up to 30,000, and then back to about 2,000 or 3,000, something like that. Some crazy numbers.
And it still is a high audit area for the IRS.
Well, but again, that's the past administration. I'm wondering if that's going to be less so.
I agree.
So who knows? I mean, it's a whole new thing. I was thinking about this. Will Bitcoin or the other coins, whatever they are, be used as currency, real currency? And I'm thinking to myself, when we used to do bartering, okay, I'll give you 10 chickens for a cow, all right? And then somebody came along and said, well, why don't we just give you this coin or a piece of paper that represents the value of that? And I'll bet that it took a while before everybody said, okay, I will accept that. Now we're looking at something new. And I don't know how long it takes, but eventually I think it could be accepted by everybody as currency. So it's just a new thing.
You think about the credit card. I mean, at some point, I'm sure when credit cards first came out,
or debit cards.
Yeah, it's like that's a whole different way of buying goods versus using direct cash. And so now it's, most people use their debit or credit cards and pay it off every month versus using direct cash.
Well, things are changing so quickly. I mean, this technological revolution is the fastest, and each one gets faster, but this is the fastest ever. And I'm hearing a lot of chatter out there about medical advancements. And I've been talking about this for months and months and years now because of AI. And people are now talking about maybe you get a vaccine to get rid of the cancer that you have. I don't know if
that's what Stargate's all about.
I understand that, but this is what's happening. There are companies already doing this.
Oh yeah, but I'm saying that's the big push of Stargate.
Right. So I'm really excited. I really am. I'm excited about the future. I know that any technology can be used for devious and evil things, but my goodness, there's so many things that are going to happen that are going to be great. And Rosie the robot is not far behind. I'm telling you. I talked about this last week after being at the Consumer Electronics Show about cars, the self-driving cars. They're coming, and they're coming now. It's not even in the future. They're being used in San Francisco. They're being used in Phoenix, and all these companies are putting stuff into the car. That's the next big industry, or the big push in that industry. And I think it's great. You guys, especially you, Vince, you go out and you have all that drinking stuff that you do down in San Diego. I'm kidding. He does. Well, maybe a little. And now you can just have the driverless Uber get you, or driverless whatever it is, and take you back home, and you're safe. And we want you here. We don't want you to be one of those fatalities.
Well, I thank you for that. I really appreciate your concern. But I'm going to end up I'm going to say two more things. One, what we're finding out with all of this, capital coming into the market right now, especially in these investments, that number one, the private sector can do it way better than the government. And number two, the animal spirits are back. And I will end on that.
All right. Well, I appreciate that, Vince. Talking about us as animals is really great. But anyway, we will talk to you again next week. I think that's the 30th. We're going to do another one of these. Until then, thanks for listening, and we'll see you soon.
Thank you.
Thanks.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.